After struggling at a 9-to-5 job, all one dreams of is saving to buy a home. But did you know in the first half of FY25, the average price of homes sold in India's 7 biggest cities like Bengaluru, Delhi, NCR and Mumbai went up to 1.23 crore rupees. Now, does this goal feel like it's slipping further out of your reach? You might want to pause and ask, should you invest in property or should you buy stock of companies that make your homes? In this video, we'll be looking at what's in store for real estate sector in 2025 and is buying property better or is buying realty stocks better? Watch the video till the very end. Also know which are the best realty stocks that you can bet on. What performed the best? Well, if you're interested in buying a home, you must know that more recently, property prices in Indian cities have risen significantly, showing a 45% increase in just 5 years. But on the brighter side, over the last 15 years, property investments have given returns of 6.4%. When we look at a longer period of 20 years, the returns increased to 8.4%. So how do you make this happen? Let's say you're considering buying a property for investment. If you buy a property for 1 crore rupees and rent it out for 30,000 rupees per month, your yearly rental income would be 3.25 lakhs. Now, this means that you're earning roughly 3% of your property's value each year in rent, which is what we call rental yield. At a pan-India level, the average yield on furnished properties is nearly 3.3%. If we specifically look at cities like Bengaluru, India's tech hub, currently leads with the highest rental yield at 4.45%, while Mumbai follows at 4.15%. But what if you're more interested in investing in real estate through the stock market? The Nifty Realty sector has shown impressive growth, rising by 40% in 2024, significantly outperforming the broader Nifty 50's 13.5% growth. 70% of Nifty Realty stocks delivered multi-bagger returns in 1 year in 2024. Sobha led the pack with a remarkable gain of nearly 290%, followed by Prestige Estate projects with a gain of 238%. This follows a remarkable 81% surge in 2023, marking 2 consecutive years of strong gains for the realty sector. Interestingly, the index delivered positive returns in 8 out of the 12 months in 2024, with the highest gain of 9.3% in January. However, investing in the stock market comes with a risk. So REITs have propped up as another favorable option owing to attractive returns in the form of dividends. Since their inception, they have distributed nearly 16,800 crore rupees more in dividends compared to the entire Nifty Realty index. A REIT basically stands for Real Estate Investment Trust. It is a type of real estate investment trust that owns and operates incoming generating properties. REIT shares are attractive due to strong dividend and long-term capital appreciation, with the major REITs in India providing varying returns ranging from 6 to 39% since their inceptions. On average, REITs in India provide dividend yields within the 3 to 8% range. The yield represents how much income you will get relative to the amount that you've invested. If you want to know more about REITs, what they are and how to invest in them, comment down below and we'll try to cover it in our next video. Now, looking ahead to 2025, Anurag predicts construction of about 600,000 new homes, with half of these being built by listed companies. This suggests continued momentum in both physical real estate and real estate stocks. Top stock picks. So if you've decided to buy shares of realty companies, which are the best stocks to invest in? First, let's look at DLF. Both HSBC and Antique have given this stock buy rating. HSBC predicts an upside of 17% and a target price of 1,010 rupees. Close to that, Antique has given a target price of 1,014 rupees. The company is targeting 1,700,000 crore sales booking in FY25 and has already achieved 41.7% guidance in H1 FY25. They're also expecting a rental portfolio to grow 2x in the next 4 to 5 years. Next up is Godrej. Again, both HSBC and Antique have given a buy rating on this. HSBC sees a 30% upside in this stock with a target price of 3,700. Antique, on the other hand, has given a target price of 3,826 rupees. Now, the company has achieved 51% of the annual guidance for the booking value and added 10 new projects YTD FY25 with estimated booking value of 17,450 crore rupees. Now, the third stock is Sobha. Both HSBC and Antique maintain a buy on this stock. HSBC has given a target price of 2,150 rupees, which is a 28% upside. Meanwhile, Antique has given a target price of 2,904 rupees. Now, the company sees improved visibility on launches beyond FY26 and is aggressively planning to enter newer cities like Mumbai and Noida. Last on the list is Nifty Realty. Now, HSBC has given a hold rating with 2,050 target price, which is a 4% downside. Antique, however, has given a buy rating with 2,668 target price. It is anticipated that Oberoi will establish a strong presence in these new markets, achieving over 40% to 50% bookings within a year of launch. By FY27, bookings are projected to estimate 9,000 crore rupees, driven by launches in Thane, South Mumbai and Delhi NCR. 2025 outlook on real estate. Now, if you're looking to buy a home in 2025, take a note of this. The sector is headed for a massive growth. Anurag projects the sector to hit $1 trillion by 2030, growing at 9% annually. More importantly, its contribution to India's GDP is set to be more than double, from 6% to 13% by 2025. Now, interestingly, by 2025, just 10 companies will control 50% of India's entire real estate market, up from just 18% in 2020. But here's what makes 2025 special. Developers are gearing up for major project launches in 2025. While we've seen exceptional growth in 18% sales volume from 21 to 24, HSBC says that 2025 might see a more sustainable pace. The growth cycle is expected to continue until 2029, offering a long-term investment window. So what factors should you watch out for? Well, number one is interest rates. Any rate cut in 2025 could trigger a rally in real estate stocks. However, also keep an eye on approval delays. They could force developers to lower their growth target. That's all for today's video. Stay tuned to NDTV Profit for more.